Hey, good morning. Today is Monday, October 23rd. My name is Adam Brsan, and this is our Monday morning training. I am here with Chris Smith. We did our training last week, kind of going over a few different carriers, maybe some that people didn't really know a whole lot about, some that maybe are fairly new or at least have fairly new products in the final expense industry. So we kind of went through that. We're going to go through a quick review of those carriers, and then we're going to move on to talk about a few others today. So, how you doing, Chris?
I don't know if you can hear me okay today. I've got some mic warm up issues here. Can you hear me okay?
I can hear you fine.
Perfect. Awesome.
So,
Me and
all
technology
right.
are sometimes friends and we're sometimes not, but I'm sometimes ready to talk about companies folks may not have heard of before.
Sounds good to me. Well, it went really well last week, so let's go ahead and do it again. So, so last week, the carriers that we talked about, and again, kind of like the theme, I guess you could say, of the training was carriers that you may not know of, but you could use. Maybe people that came from situations where maybe they were not able to write business with certain carriers because there's different situations people have out there. People maybe are trying to get a release from their upline. Maybe their upline isn't playing nice, and sometimes agents just get stuck and they're trying to figure out, well, what can I do because I can't write business with these companies if I want to move on with my career. So that's kind of what we were talking about last week. And again, some of the carriers, I guess you could say, maybe are a little unique. Those that maybe not a lot of big organizations have, or even if they have them, they just don't really promote them a whole lot. So, the first one that we talked about last week was American Home Life. Very good company, smaller company. Um, the basically the to summarize it, if you ever had a contract with the Aetna final expense product or like the Ascendo CVS plan. I think even the we talked about, what was it? The Aflac is even very similar product. So the Patriot series is the product that we're talking about. Very similar. The EAP, it's like basically the same platform. So if you've ever done anything with Aetna or Ascendo or like the Aflac product, as I mentioned, the final expense product, you'd have no problem learning the American Home Life and the Patriot series. Again, basically the same thing. What do you say, Chris?
Yeah, they're ironically clones of each other. There might be some super small nuances between the three, but Aflac is Aetna, Aetna is AHL on the Patriot series. And if you loved Aetna, but you're trying to make a transition, you could write American Home Life and be essentially writing the same product. And in some cases, even at a higher commission level.
Hey, there you go. And then we talked about SBLI. And if I'm leaving any important stuff out, Chris, feel free to add it as we go here. Just a couple of the brief things with SBLI. One thing that's great, especially for those that are in telesales, they are in all states, so you don't have any problem writing business if you're in telesales. If you want like a one-stop shop, if you want to keep it simple, well, SBLI could be the place to write your business with. A couple of the niches, I guess you could say, and I'm sure there's more, but these are the ones that I always see the most, are like the COPD and the Parkinson's. Those are two that they will take standard, which would be day one coverage, where a lot of companies out there are going to push COPD to either like a graded benefit or a modified death benefit. So, and same with Parkinson's. Any others that we talked about last week, Chris, like little underwriting niches there? I just can't remember if there were any others outside of just the COPD and the Parkinson's.
Yeah, SBLI tends to be extremely liberal on heart conditions. They're preferred for AFib, fair look back on heart attack and stroke. And because they're using the Milliman risk score and not your old school MIB and RX check decision making, you can get a lot of approvals in conditions that you may not have thought would have been approved before. So this product really can cover probably 85% of what you do and do it very competitively.
Yeah, and and again, one thing I wanted to mention, because we're going to be talking about another three carriers today. You don't have to have all of these. I mean, you can kind of pick and choose the companies that you like and those that maybe you desire to do business with. They all have some niches, but I don't feel like you have to be contracted with 20 different companies. I mean, you can keep it simple. And the point of our training is not to really uh, push you to get contract with all these different carriers. Figure out the ones that you like, figure out the ones that kind of make sense to you and what you're doing. And again, we more than happy to help you. If you're not currently with us, we'd be happy to maybe have that discussion, and we'd be happy to get you lined up with some of these carriers.
Yeah, I think less is more, as ironic as that sounds, as we talk about more carriers today. But again, you don't need every single one of these. If you're watching this today as well and you're got a case that you're stuck on, you got a case that you recently wrote guaranteed issue, you've got a case you really don't know what to do with. Maybe if you commented below during the training or later on, we can take a look at it and tell you which one of these companies that we're talking about would be a great fit for a case you might be struggling with.
Yeah, most definitely. Chris is really, really good with all these different carriers and just the ins and outs of the underwriting. I mean, I know it pretty well, but he's been, again, I just kind of went the broker route about maybe a little under a year ago. So, I'm used to like the one product, one company. I've learned quite a bit over the last, 11 months or so. But yeah, Chris, he's been doing this a long time. He really knows the ins and outs of these different carriers. So yeah, any questions, feel free to ask, and he should have an answer for you as far as which carrier would be the best to use for which scenario. So Citizens, CICA, Superior Choice, they are, I would say, a fairly new product. The main thing I would say with them, and there are many good reasons to do business with them, but the big one I think is that many modified health conditions with other carriers will go day one coverage with Sika. It was pretty eye opening last week. I mean, we were talking about, congestive heart failure. We were talking about somebody that was 1 day cancer free. I think even, I can't remember if kidney dialysis might maybe even fell into that category. But I know that there were a lot of health conditions that the main thing I know, like Chris had mentioned last week, as long as that person is good with taking their medications and seeing the doctor on a regular basis, it is going to help with being able to get those policies issued. One thing I left out on here too, Sika also does not run an MIB. They don't run an RX check. You are essentially the underwriter of the policy. So do your part, answer those questions correctly, and there's really no reason to not to. I mean, the chances of it going day one seems pretty good anyways. So, do it the right way, and this will be a product that should be there for a very long time.
Absolutely. I think this product was built to last. As much as somebody might skeptically say, how do they possibly take all these things? There's a lot that happens behind the scenes with actuaries and underwriting and carrier to decide what they're going to do. But the folks that built this product, who put their efforts and time behind it, built it to last. So I don't think you have to worry about something this amazing sounding only being a flash in the pan kind of product, because it's built to protect you as well. The chargebacks are taken out of the back end. The agent dashboard makes it very friendly for you to see if there's a problem. And not to mention, when you're able to place a great percent of your business with this carrier, they're not just getting sick people. They should be getting a good mix of healthy and unhealthy individuals, which is why you should have a core mix of carriers. Don't just place your junk with somebody and think that's going to last forever. Give your carriers treatment as if you had owned that insurance company. An insurance company like this was built by agents for agents, so treat it with the respect they look to you as well.
Most definitely. And I did have a question. Looks like someone, Agent 2 at 23 on YouTube, had asked what carriers are good for folks younger than 30 without health conditions. And I mean, my answer would be, we'd really need maybe some more specifics as far as what they're looking for, what kind of product. There's so many. I mean, someone who's in perfect health, I mean, there's tons of different carriers. It really just depends on the need, I would say. Wouldn't you say, Chris?
Yeah, appreciate the question. And if you got a carrier question or case question, we'd love to answer them for you today. Someone who's under 30, if I'm in a final expense home, I try to keep it final expense simple. Like if I just help their dad, their parent, their grandparent out, and I wrote them as citizens, for example, I'd probably write the same person, the same carrier, and keep it simple. If this is a warm market, a referral, a mortgage protection, that's a whole different ballpark. But remember, do what you're good at. If you're a final expense agent and you stumble upon a 30-year-old, do you really want to go out there and try to figure out how to write an IUL out of nowhere? Stick with what you're confident with, and they'll get better at it over time.
Yeah, and we talked about some carriers last week too. I think that they started at age 0. You know,
Mhm.
there's some that start age 40, age 50, but I know that we did talk about a few. But yeah, go back and watch the training from last week too for anything that we leave out, and I think it'll be very useful to you.
I'd
The
also
Polish
throw in
felt,
there,
yeah,
apologize, a Transamerica great 0 to 85 product for somebody who might be 30 and healthy. They also have a strong whole life product, Baltimore Life, which I'm sure maybe in part 3, if we're not covering it in part 2 today, 0 to 85 products, Citizens 0 to 85. There's a lot of good options. If you're on this video, on this training, you're watching it live or recorded, and you're thinking to yourself, I don't have a solution to that situation, this is another example of let us know, and we'll put the right tool in your hand.
So then on to the last one that we spoke about last week was the Polish Falcons, PFA. They're a fraternal out of Pittsburgh, Pennsylvania, I believe. And Chris, you mentioned we were talking last week that you had actually kind of seeked out Polish Falcons. You were just you were just looking for kind of like a niche carrier, something that kind of fit the need when it came to like the price busting, or like what was it? How did you come across them?
Yeah, I maybe I need a better hobby in life, but sometimes I'll just spend time when I have time, which is pretty rare, looking for things that nobody's ever seen of before. And the first time I ever stumbled upon Polish Falcons, I'm like, this is actually a really good product, but the process was behind the times. So I know what works for me and what can be duplicated. And I'm like, I'm just going to revisit this when hopefully they catch up to the 21st century. And then lo and behold, they caught up to the 21st century and probably into the future with a flight application, the instant decision, the right software, the right business, a very cohesive home office looking to grow. So then once I saw that product take its step into the next realm of usefulness, and then the commission that we're able to offer with it, it was a no-brainer in that situation.
That's awesome. You know, I love carriers that are willing to listen. I mean, to me, it shows that they want to earn business. Those that they want to keep up with the times. I mean, they want to kind of, if they see what other companies are doing and the reasons why agents are kind of going in those directions. It's nice when there are some out there that are willing to kind of stay up to date with things, or at least get up to date with things to remain competitive, or at least be able to start getting a lot of business. I mean, I think that we're going to be able to push a lot of business over to the Polish Falcons over the next 12 months, and probably much further than that out. Their processes are super easy. Their e-app, I mean, I wrote one last week again. I mean, it's such an easy app to write. It takes about maybe 5 to 7 minutes and you get an instant decision. The one I wrote last week, the person, we set up the bank draft, but then if the person pays the first premium payment right away with like their debit card, or even a credit card, you get paid on it right away. I wrote that piece of business, I think it was on Wednesday, and I received the commission Thursday morning. So
How incredibly persistent could that be piece of business be if you've made a good quality presentation, you've closed the choice, you've submitted the application, they handed you a debit card, they've literally made a payment before you've left the home, which clears their account. Like that has to be like almost 98% persistent in those type
yeah,
of situations, which
yeah.
I
I
love
mean,
to see.
it ran the payment when I was there. I mean, it said payment successful. And yeah, and then about maybe 2 hours later, I got an email that that I had a commission that would be showing up the next day.
Amazing.
So pretty cool. And their rates are better than, I would say, pretty much everybody. I mean, if you use the toolkits, the insurance toolkits, they're usually like top 3. And I mean, they're very good, very competitive. Again, in the underwriting, pretty lenient. You don't have to be in perfect health to get day one coverage. So yeah, awesome product that I'm definitely looking forward to utilizing a little bit more in the future here. So let's move on to today. First, I do have some breaking news. Um, for all of you, and for those of you that were on last week, we talk about the state availability for a lot of these products, and Sika. One thing we talked about last week was that they were not in a whole lot of states yet, and I actually noticed over the weekend that they had added a lot of states. What happens is kind of like in the internal side, insurance companies they submit their product to, I guess, what you would call like a compact, and the compact, if one state approves it, a good number of states approves it, and not all states are part of the compact, but those that are, it makes it a lot easier to get a lot more states added very quickly. And I'm assuming, I don't know for sure, but I'm just kind of assuming that that's what happened. That it must have been approved in a state that was part of that compact, and then it just kind of blew up all over the country. So pretty good. Unfortunately, still not in Illinois, but I think will be soon. And then they also mentioned, actually, Wayne Daniel had mentioned, he's the one who's kind of behind the scenes with the Sika. He mentioned that they are coming out with like a preferred or like a super preferred rate as well. So, it's awesome that they take everybody. They have the guaranteed issue. They have first day coverage for others as well. The first day coverage, because they take so many health conditions, it's not the cheapest rate, but that's where it sounds like they're adding like another tier that's gonna get those people the better rate that are in very, very good health. So
Yeah, that guaranteed issue 0 to 85, something that you cannot get unless you choose to operate in a captive capacity. The standard rate, which covers like almost everything, and then a preferred, soon to be preferred rate with great commission levels. It's really going to be a game changer for agents that have that available, agents that are coming from a captive sense, agents that want a simple approach, agents that want a product that shows them when there's something wrong without having to go through 30 different screens to figure it out, and something you can manage, and something that pays you every single week if you're writing the business, because the chargebacks that occasionally do happen are coming out of your back end and not affecting your front end income.
Yep. So yeah, again, so many good reasons to write with Sika. Fairly new product, very easy to write. Again, you are the underwriter essentially. No RX, no MIB, and now it's available in a good portion of the country outside of the Midwest, the states right around me, and then the Northeast, and then California, where it's tough to get anything approved. So the first carrier I wanted to talk about today is Lumico. Lumico is one that I don't know. I really don't know how popular they are, how unpopular they are. I really don't. I know that we've used them and they've been pretty easy to use. They have pretty simple processes as well, and some things that are pretty unique with like how their standard, how their modified works, some of the conditions that they'll take that others may not. Again, you can pick and choose the carriers that you want. You can even do different rate comparisons and try to figure out which carrier really makes the most sense for what you're looking to do. But Lumico, their product for final expense goes ages 40 to 85. So we do get that younger under 50 that some carriers don't touch. So they do start at 40 for the final expense. I'd say their rates are very competitive, and they do have an e-app for face-to-face or telesales. No phone interview, instant decision, very simple signature process. Anything you'd want to add there, Chris?
Yeah, this is definitely another one of those companies that folks probably haven't heard of before. It wasn't one I heard of until I stumbled on it, probably similar to Polish Falcons. Again, I'll admit the dork side of that situation, but it's a really easy to use company that E-application is probably as simple as Facebook. If you're on this stream, you could probably write this product. It's telesales friendly in the fact that you can do a text to sign. It's actually was originally built for a captive telesales approach. And that's why when you look at this product, you can probably place 90 to 95% of your business somewhere in their 3 tiers of underwriting. It was originally built as a captive product, so that's why you're able to do it in that sense. Commission levels are great. The agent website is relatively easy to understand. The folks that we work with there are relatively receptive to answering questions that you have. Not to mention the policies look good. I mean, we're in a day or time where some carriers are not sending out a policy. I don't get it. That's their decision, not mine. Some carriers send out a policy that looks like a piece of junk mail. Again, I don't get it. This policy comes in a nice professionally looking folder. Policy is stapled together. Again, that sounds silly, but it's simple and important, and it looks good when it comes in your client's hands. So overall, this is actually a pretty impressive product that folks probably haven't heard of before.
Yeah, next to like the Polish Falcons, I think that the Lumico E app is like right there. I mean, as far as simplicity goes, it's such another very easy E app, quick and easy. I'd say 10 minutes and you get the decision at the end. I used Lumico a lot for like diabetic neuropathy. I know is one that they'll take where others may push it to like a modified. They don't really care too much about like the complications of the diabetes, or at least with the neuropathy.
Yeah.
So pretty competitive underwriting. Now they go age. They just went down to age 40 on their product, 40 to 85. And this is just kind of a breakdown here. Kind of shows maximum face amount. So they do go up to 50,000 for final expense to the age of 60. And then it just kind of goes down from there. As you can see, 61 to 70, 40,000 max, and then so on. So not too bad though. 20,000 even at age 80 is not bad. So they do have an accelerated death benefit on their product, and there are accidental death benefit options available as well. So this is the slide that I thought was kind of interesting. They have the preferred rate, which is first day coverage, and then you got to be careful because you might think, okay, I see that they're standard, and you might just think, some companies standard just means the rate's higher, and they're still fully covered right away. So this is more their standard. I would really compare more to like a graded sort of death benefit. Their standard, the first year pays out 25% of the face amount. The second year, after the first 12 months, pays out 50% of the face amount. And then the third year pays 75% of the face amount. So, it's just kind of like a scale up there the first 3 years. So they're not fully covered until those 36 months have passed. But then they're modified. I mean, 10% of the face the first year, 25% the second year, half of the face the third year. That's really not bad. I mean, to me, that could be better than just your regular return of premium. If anything happens within the first 2 years, they're going to get back at least a little bit more than just that. So
yeah, and the underwriting and what you're going to be able to get covered and modified, which is really like graded anyway, is incredible. I don't want to steal the thunder on it, but we're talking things like HIV, which would be guaranteed issue with Citizens and decline with pretty much else. You're going to see it right here. It's incredible.
That's where we're at.
You can get covered here.
You can go through this slide if you want, Chris. Kind of
perfect. Yeah. So obviously, conditions like a transient ischemic attack, graded coverage, lung disease, graded cancer, graded. But some of the stuff that you're like, well, what do? I only have a couple companies. I'm trying to make a change. Biggest theme of what we're talking about here with these off-brand companies: oxygen, organ transplant, HIV. A lot of these conditions are going to qualify as modified or mini modified, or however you want to call it, with Lumenco, where if you're thinking to yourself, well, I don't have AIG, I don't have Gerber, I don't have Great Western, I don't have anybody to write with these companies, I'm going to have to walk away from business because I walked away from that organization. Lumenco can really do a great job in covering those for you.
Well, boy, and like Alzheimer's, dementia, Modified. I mean, yeah, I mean modified. Well, again, that death benefit, it's better than just your traditional 2-year waiting period. 10% of the face first year, 25% of the face second year. If anything, write a larger policy, and they're going to be covered with more coverage from the very first day. So, that's not bad. I mean, I mean, the only way you're going to get somebody covered with Alzheimer's or dementia usually is on like a guaranteed issue product. So that's pretty good to see. And like you mentioned, Chris, the HIV and AIDS, same thing. So
I got another pro tip for you that just came to mind. You might encounter situations very infrequently, but they do happen because they've happened to me, where you have somebody in awful health, but they want a lot of coverage. And you max them out with Great Western. You hit the max on AIG. You even figured out how to write Gerber and you wrote Gerber, but they want 75,000, 100,000, like a lot of coverage. And you've confirmed they can afford it. It's a quality opportunity. You got situations like Lumenco where you can fall back and stack, say, a GI with a Lumenco modified and get them the amount of coverage that they need without just saying, I've got nothing left I can give them.
yeah, that's a great point. Uh, because yeah, I mean, again, with like a modified death benefit too, a lot of times the maximum faces are lower. A lot of companies, they might only want to insure that person for maybe 15,000, maybe 20. So, it's good. At least you have some additional options there. And like I mentioned, it's a little bit better than just your traditional 2-year with the return of premium. Another thing too, you're not going to take a huge commission cut where like the GIs, some of them you're taking like, 40, 50 points off to write it. I don't think the modified you're going to take as big of a haircut either.
Yeah, it's a fair commission level. There's still a renewal built into it. You're not doing it as charity work as much as we do this because we want to help people. We're also operating a business. And some people will say, well, the rate this and the rate that. Well, I mean, rate is secondary in some situations, and your client isn't a subscriber to insurance toolkits as much as you think they might be. Being efficient, placing a good product in the home, something that's going to get issued and get you paid, is very important for a lot of agents.
No, you're right. I mean, we talk about the rate busting products and that. I mean, it's great to have one, but I don't feel like you have to lead with it. I mean, if there's other products that are good quality, there's more to it than just the rates for sure.
Definitely a
Um,
balancing act with that.
and then we have the standard. And then remember, the standard with them, again, it's almost like a graded death benefit. So it was what, 25% of the face first year, 50% second year, 75% of the face the third year. So some of those though, like, not bad. Like if somebody had a stroke within the last couple years, that would pay 25% of the face first year, 50% second year, where same thing, where a lot of companies are going to go modified on something like that. Cancer, even within the last 24 months, not bad to go standard on that. Chronic kidney disease. So again, I definitely feel like there's a use for them. Like I mentioned too earlier, diabetic neuropathy, day one coverage. And that's one for sure that a good portion of carriers are going to go with like a modified death benefit, and you can get day one coverage on that. So pretty good. Anything else you wanted to add, Chris, before I move on?
Yeah, a weird little ism to this is they use a BMI score, not a height and weight. So you're thinking to yourself, you're looking to the underwriting guide, where is the height and weight chart? It's based off of the BMI score, not necessarily how tall and how much does somebody particularly weigh.
Okay, well, that's interesting. So moving on, we got, I know you were wondering if we were going to be talking about this today, Baltimore Life. I did put 2 of their products on here so we can kind of go through both.
Love it.
Yeah, there's the I Provide and then the A Priority plan. So we're going to go through the I Provide first, which is kind of more of like a traditional final expense product. And then we're going to talk about the A Priority that is not your traditional. It's for those maybe that are a little bit healthier, that are looking for a little bit more coverage. So the I Provide, well, it actually goes ages 45 through the age of 89. So
How about
another
that?
one of those over 85 carriers. We talked about one last week, American Home Life. There's only maybe a handful of carriers that will go through the age of 89. So it's nice to kind of have another one. Same scenario like Chris was talking about earlier. A scenario where maybe that person is over the age of 85, and a lot of the carriers, they'll only do a max of like maybe 10,000 at their age. So like you said, you can just kind of pile up maybe a few different options if they can afford it. I mean, it's not going to be cheap at that age, but at least there are some different options out there for those that are over 85. Minimum face of 2,500, maximum face of 50,000 on this plan. So there's only a few final expense carriers too that are going to go up to 50,000. A lot of them they cut off at maybe 30 or 35,000. So it's nice to have another one. You run into a client that just wants a little bit more than that. I mean, heck, funerals cost more these days. If they want more money left behind to help with other things, at least they have that ability to go all the way up to 50,000 with the I Provide plan. And then this plan also, it has a whole life option, meaning the person pays into it for the rest of their life. They have a 20 pay option where they can pay a little bit more each month, and then it would be paid off in 20 years. And then there's also a single pay option. You run into someone who's maybe they got a lot of money in the bank and they say, I just want to pay off my funeral. What can I pay to have a paid up policy? So you can do that with Baltimore.
Adam, I gotta say, I had a
Sure.
situation 2 weeks ago, and the client had unfortunately lapsed coverage. I had written her back in 2020. Couldn't make it back in time to conserve the business, but I make an effort to go back and see everybody because most of the time, at least 1 out of 4 times, they didn't lapse because they don't like you or they don't like insurance. They don't see the purpose. They just lapsed because their life happened. So go back and see these folks. And I did a comparison between the policy I wrote her in 2019, 2020, which was pretty fair. And it was the same rate for a Baltimore Life 20 pay as the life pay on this other product. It's crazy. Like, do the comparison in the application and just check and see. You're sitting in front of somebody who's 50 years old, 55 years old, 45 years old. A 20 pay is probably a better option. Or maybe you're even looking at a situation where you can't beat the price. Someone's got a policy, it's a few years old, it's a very competitive carrier, but it's a life pay. And you say to them, Adam, this policy is great. I can't even get you something that's a better rate. But I got to ask you, do you realize you're going to pay for the next 45 years on this $10,000 policy? And you're going to be like, well, that's crazy. I'm only 40 years old as it is.
Oh, yeah.
Well, Adam, for maybe $5 or $10 more a month, let's check and see. This could be paid up in 20 years instead of you paying on it for your entire life. And utilizing that 20 pay option as a replacement option is a great hack that we can use in this business.
I do it all the time. I mean, and you can just take that premium, that their monthly premium, multiply it by 12, and then multiply it by 20. And you can show them what they're actually paying in over the 20 years. And majority of the time, it's a lot less than what the face amount is. I mean, the company, they're earning interest on that money. So, that's something that's helping. But yeah, I wrote 220 pays last week on younger people, and just you break it down for them and you show them. And it just only makes sense to pay a little bit more every month and have it paid off in 20 years than to pay into it forever. But one thing I would recommend to agents out there, if you are selling a 20 pay, make sure to remind the client of that several times and tell them, look, don't let someone else come in here and try to sell you a product that's cheaper, because it's probably going to be cheaper because you're paying more on this. So it's paid off in 20 years. So, you could have someone come in and try to replace it saying that they can save them quite a bit of money, but really they're not going to be saving them any money because this plan is going to be paid off in 20 years, where more than likely the person coming in trying to replace is just quoting them a traditional whole life. So just keep the client aware of that.
Adam, have you ever heard of the calculator objection or been in the situation where someone says to you, well, 12 divided by this divided by that, I'm going to pay more than I'm going to pay in my entire life than this policy's worth? Have you encountered those before?
All the time. Yeah, for sure.
20 pay. Like, shut them up. Here's a 20 pay option. If they're really serious about it and that's how their brain thinks about it, 20 pay is going to completely overcome that objection.
Makes sense. Most definitely. So yeah, 20 paid's a good option. This is something too that I saw that was kind of unique is that they have a $1,000 cash draft. Upon death, your beneficiary can receive $1,000 cash draft to cover necessities until the death claim is settled. So I need to do a little bit more research on that, unless you know a little bit more about
Yeah.
how that works.
It's very unique. It's in their policy. They can take that to the bank with the person being recently deceased and receive $1,000 of the death benefit right away. I mean, maybe that person needs to pay the rent to be able to keep the place from being closed up in the process of somebody dying, or pay for some urgent expense right away. That's where that $1,000 comes into play. And that's something that almost nobody else offers and is uniquely a Baltimore Life sizzle.
Now, is that something that is only on like a non-contestable claim?
I would assume so. I would assume,
Yeah.
just like anything, someone dies in the first 2 years, they're going to have to do their homework by law. It's not that the company's being unfair, it's the law behind it. But the cash draft benefit after 2 years can come in handy for just a little bit of sizzle.
Yeah, most definitely. And hopefully it doesn't take too long to get that claim paid, even if it's, once it's past that 2-year contestable period. Most companies, they should pay it hopefully within 2-3 business days, I would hope.
Mhm.
They have preferred, standard, and then modified. Now, their modified is more of like your traditional on this product. Just 110% of the premiums paid back if death does occur within the first 2 policy years. Simple application, and it does have an immediate underwriting decision.
Adam,
Um,
one of the other things I like about the platform that I provide is built on is one of the biggest mistakes I make in this business. I'm sure others make, but I'm willing to testify to, is I enter the bank information wrong sometimes. Like too close to lunch, late in the day, eyes are tired, moving quick. It takes one number, and before you know it, that account comes back invalid account number. In this application, when you put in the information, it runs a verification to make sure you put it in there correctly, and they won't issue it and they won't pay it if that bank account doesn't validate properly. So it protects silly mistakes like I tend to make.
well, that's a nice feature as well. Anything else you'd want to add about the iProvide? I didn't really get into a whole lot of the different underwriting, or do you know, like, are there any like specific underwriting niches, I guess you could say, outside of just even the qualification being over 85?
Yeah, so the standard rate covers a lot of those same standard conditions that you would see a Transamerica standard, a SBLI standard, a Forester standard. All those kind of standard conditions are very similarly applied to here. And you'll also find a lot of other very niche type issues covered in standard. And I have a video on my channel that specifically breaks down niches on this product. If you switch over to the life insurance and everything between channel, scroll down a little bit further and find the one with the Maryland flag on it that has this product, and we can get into the niches of that. But again, this is another flagship type product where you could place 85% of your business there very competitively and not overcomplicate what carriers you sell.
Hey, thanks, Chris. Yeah, I'll add that link to the video so people can see it when we load this on YouTube. So, yeah, go watch that video again. I mean, heck, get a full. I don't know how long it is, but just a full demo of the product that's available there. Then the A priority, again, like I mentioned, this one is not your traditional final expense product. A little bit different. It does insure the younger ages as well as the older. Um, Minimum face is 15,000. Maximum face is 150,000. However, they recently changed it where if you are 50 years old, 50 to 80, the minimum face is now 50,000. So to me, that just means that they want to push people under that 50,000 to the I Provide product.
Mm-hmm.
And then those that want a larger face than what the I Provide offers, well, then that's where the A priority comes in place. And again, I know you mentioned too, this is like a price busting product. If and again, maybe you could talk a little bit about that as well.
Yeah. So, other quick pro tip that you might not think about, but you'll learn from watching these videos through their completion is that 50,000 on a priority might actually be a better premium than some of the $40,000 face amounts on the final expense side. So when you're running your rates and you're in insurance toolkits and you're doing a comparison, because all these products are in toolkit, just check really quick. Like go up to 50,000 and see if 50,000 on a priority is a better premium than say 40 or 45,000, or if the difference is a mere few dollars. I had an agent recently, and this agent writes a hell of a lot of this product. Do that comparison and say to the client, well, 40,000 is only this much, but for 50,000, it's this much. And it's almost a common sense situation. Considering the fact that I'm sure you'll go into it, but I can't forget to say it, this is a dividend producing product. That means you have the option to either have the dividends growing the face amount or decreasing the premium as this policy continues to grow and to mature. I mean, almost nobody else does that. Foresters does it, but Baltimore Life does it, and that's something that almost no other product has.
Yeah, that's pretty cool. Can you get into maybe a little bit more detail on that?
Yeah, so a dividend in this situation, when you're going through the application, you're picking your options. The first dividend option is basically make the face amount bigger the older this policy gets. So you say, Adam, the cool part of what we picked out for you today is not only is it the lowest rate you qualify for, the best benefits possible, but the longer you keep this policy, Adam, the more coverage is going to build up in the policy. They're going to be mind blown. Adam, it's a lot like your mom and your dad and your grandparents' Prudential and the MetLife they used to talk about, and we so rarely see. This does the same thing. Or we have another option. You tell me which one you want. And sometimes I just pick one, but sometimes I give them options. The cost of the insurance. There's an option where the cost goes down the longer you keep it, but the coverage remains the same. So which of those would you prefer? Your insurance to increase as you get older or your premium to decrease? Huge
Yeah, that's
selling
pretty
option right
neat.
there.
Yeah, this is a product I'm going to have to look a little bit more into. That sounds pretty good. I haven't really done a whole lot with Baltimore Life yet, but
Or
that
what if you're in a situation where you just can't quite beat the rate? Like today, you can't beat the rates, but you get them 50,000 in coverage, and you get it that premium decreases the longer they keep their policy, and you think a little bit deeper about that situation. Another little pro tip on how you can use that dividend option to make the sale. Somebody asked about 30 years old and in good health. Here's a great option for that. 30 years old, great health, up to 150,000 in whole life coverage, simplified issue. It's almost unheard of in the market besides in this product.
and I see that it looks like they have 3 different sets of health questions depending on the age. Looks like option A 0 to 17, option B 18 to 49, and then option C 50 to 80. So, but I think that they are now. I mean, I know it may be a little bit tighter than like your traditional final expense, but I feel like they are kind of loose too on some certain health scenarios, wouldn't you say?
Yeah, I've written quite a bit of this, and even prior to the face amount being increased, I used it a lot in the final expense market. And you might say to yourself, well, for all this stuff, it must be impossible to qualify for. It's actually pretty fair. Like I see more declines on other final expense products than I did on this one. So put it in toolkit. All the underwriting is in toolkit. And unlike some other bougie products that don't even fit into the toolkit algorithm, you can have the whole underwriting case put in there, and it'll tell you if a priority is a good option. A priority is instant decision. So if it turns out it's not, you'll know right then and there. And there's an option for them to email you why they didn't approve it. So similar to what American Amicable does, Adam, they'll show you right there in an email and in the application little codes that came up as to why this person is not approved.
That definitely helps. I mean, like I always say, I mean, otherwise you're playing guessing games, trying to figure out what the best option would be for the client. And I mean, do you want to go through like 5, 10 e-apps until you can figure out if you can get that person qualified for day one coverage, or do you want to just accept the modified death benefit decision? Like, I love the fact, with the carriers that actually give you the reasoning behind the decision. It makes our lives just a heck of a lot easier. So we kind of know where to shift to get the best option that's available for the client.
Yeah. This is also another carrier we have a great relationship with. Doug Murphy, their main man, charging most everything there. Great person to work with. If something didn't go the way we wanted it to, they'll explain why it was the way that it was, because insurance companies have rules, even though we're not used to operating within yes no parameters and entrepreneurship. Their contracting department is on point. Heck, they send you a simple email that explains what you're getting paid for and then when you're getting paid for it. Where some carriers you have to play complicated games just to figure out why you're getting paid.
Yeah. So the last one, and I wanted to go through real quick, is Sentinel. And again, there's some, there's positives and there's negatives with all carriers. First and foremost, I'll tell you, Sentinel, they don't have an instant decision, but they do have an e-app. And I feel like there still is a bit of a use in some scenarios for them. And again, for like the younger ages, we talk about. So just kind of wanted to break them down real quick too, because, one thing they also have, I would call it like a graded death benefit. They have they call it the New Vantage product. They have one New Vantage 1, 2, and 3. New Vantage 1 is kind of like a preferred death benefit day one coverage. And then Vantage 2 is like your graded benefit, 30% of the face first year, 70% of the face second year, and then fully covered after that. And when people fall into that category, I love that if they would be modified somewhere else, because like I said, you can just add more coverage. If the person tells me that they want to be cremated, well, heck, even if I did 10,000 in coverage, they're going to be covered with 3,000 from day one. So, that's what I like, even if they do have some health conditions, if it would fall into that category. And then the Vantage 3, again, your traditional year 1, 10% return of premium, year 2, 10%. There are riders available, accidental death. They also have, we talked about the 20 pay option. They have a 10 pay option as well. So if the person wants to pay even a little bit more each month, they can have that policy paid off in 10 years. Someone who is, one example I always use when I'm talking to grandparents wanting to insure their grandchildren, like your 5-year-old granddaughter, you can take out a policy for her. And when she's 15 years old, it'll be paid off. And you can calculate the rate. You can show that person how much they actually paid within those 10 years. I mean, a 10 pay here could be a better option than a 20 pay, even with other companies, because, again, they probably pay a lot less in the 10 than the 20 with others.
Or life pay on a child. I mean, it sounds nice. They're great little throw-ins. I'm not going to say don't write it, but don't underestimate yourself either. You think to yourself, grandmom's only going to pay $7.95 for this child whole life policy, and it's better than me walking away empty-handed. You'd be surprised what they're willing to pay to insure their grandchildren, and you'd be surprised how this is a better option in those situations than life pay child whole life products that also don't pay you renewals. Some people are thinking to themselves, I'm going to do a comparison. And New Vantage 3 and Lumen Co Modified and all these situations, they're more expensive than me writing a GI product. They might be a couple dollars more, but it might also be a more competitively paying product for yourself. It might pay you renewals where some GI products, don't. So remember, this is a three-legged stool. What's best for you, the carrier, and the client, not just a one-legged advantage biasing one thing over the other. So New Vantage 3 modified all the way up to 85, Adam. I guess I could be wrong occasionally, but it looks to be correct. I've had folks in terrible health, 82 years old, that I placed the New Vantage 3 before. Graded coverage for some niche conditions, and 0 to 85. Again, somebody asked about a 30-year-old. Here's another option for a 30-year-old with Sentinel.
Yeah, and there are a couple niches too that I was going to bring up here in a minute. But another thing too, a lot of times, a grandmother even might want to take out policies on all of her grandkids. Grandchild riders are great, but they expire. When that person turns 25, it expires. Grandma might not be here anymore. There might not be somebody else that's going to take out a policy for that person. They might not do it themselves. But if grandma takes out the 10 pay on those grandkids in 10 years, it's paid off. And that's a gift that she's leaving those kids for the rest of their life. That's going to help those, her grandkids' families. So, you don't always have to go with the riders that are available for children or grandchildren. You could always do a 10 pay. Like I said, had that thing paid off. Yeah, you're paying a little bit more, but then they have it forever. So So then just a few of the niches, and there's probably more than this, and Chris can add if he knows. Um, the ones that I see a lot with Sentinel, insulin dependent diabetics. As long as there's no complications, they're going to take that person day one coverage. A lot of the different carriers out there have a question on their app too, like if you have used insulin prior to the age of 40, they may push that to like a modified death benefit. Where Sentinel, they'll take somebody under the age of 40 who's on insulin and they'll insure them from day one.
Mm-hmm.
So that's a very good niche, I would say, because most companies are not going to take that insulin dependent diabetic from the first day, and the rate's very competitive.
Yeah, the preferred rates are very competitive on this product. The commission level is very competitive. It's probably also one of the easiest products to contract with. I know that has nothing to do with underwriting, but I don't want to forget the fact that you can get an agent number with Sentinel within like minutes of completing the contract and get to writing business very quickly as well.
Yeah, I noticed that. I mean, actually, another one, Sika, we talked about a little bit today and last week. They're very fast, at least right now, with their contracting. I sent a contract last week to an agent, and he filled it out right away within like 2 or 3 hours. He had a writing number.
Amazing.
So, I mean, the same day I sent him the contract, he could have went out and wrote some business. So yeah, Sika really good too when it comes to contracting agents quickly. If you're looking for contracts, like I said, let us know and we can get you out writing right away. And then another one, congestive heart failure, cancer, sickle cell. Again, those are modified where a lot of companies are going to turn that business down where you would have to go to the guaranteed issue. So just another benefit, I guess you could say. Again, it's the 100%, or I'm sorry, 110% of premiums paid back within the first couple of years. But now remember too, pretty much all modified policies, if the person dies in an accident, they still are fully paid from the very first day. So these are only that 2-year 110% is only if you were to die due to natural causes. So, but anyways, just a few other niches. Their e-app, I'd say it's pretty simple. I mean, it's almost like a fillable PDF. It does take a little bit longer to fill out. One disadvantage, I would say, you do have to input all the different medications that the person's taking. It does give you a drop down for the reason that the person's taking the meds. But honestly, I mean, if anything, it protects the agent too. The more information that you can provide, well, I mean, it just shows that you're doing your job when it comes to a claim that maybe needs to be contested. I mean, you can at least say, hey, look at, we disclosed all of this information right here on the application. So,
Yeah.
Maybe it's not a bad thing that they ask for maybe all that additional input, but at the end of the day, I know most agents are looking for the simplicity. And that's where if you need them for certain situations, great. But anything you want to add, Chris?
Yeah, I think one of the other pro tips we can share today towards the end of the video is a lot of the guaranteed issue carriers, especially the big name brand ones that the big 3-letter IMOs push, have very aggressive chargeback rules for death in the first 2 years. I'm not going to quote them because I don't want to be incorrect on camera, but just look in your contract, look in the carrier contract, do some personal research on it. You might actually be on the hook for that person as a chargeback, even when you're not even receiving commission for it, because some of these products don't pay commission into the second year. You might be on the hook for a 50% chargeback if that person dies of natural causes in the 23rd month. Where, if you may have considered writing this person modified with Sentinel or Baltimore Life or Lumen Co., you might not be nearly as exposed to a surprise chargeback just because somebody met their maker within the first 2 years.
Yeah, that's a really good point. Yeah, look at your different contracts because, I mean, I was talking to a guy last week. We started talking a little bit about some different guaranteed issue carriers or carriers that have guaranteed issue options. And I mean, there are a few out there. If those people die within the first few years, I mean, you're getting hit with that full chargeback. And if you get paid as earned on the guaranteed issue product, imagine that you're getting paid $100 a month for 18 months, doesn't even feel like you're really making a whole lot of money on the piece of business. And then that person dies and you get hit with an $1,800 chargeback. I mean, that's no fun to pay back. So, that's where, yeah, there's carriers out there that just have your standard chargebacks, even on the guaranteed issues. So maybe that's another topic that we could maybe talk about on a future training.
Yeah, the important little things to know without letting the little things get in the way. I had someone ask me once in the midst of them sitting home and getting ready to get ready and not getting into the field and learning, why am I not receiving commission on the policy fee on this carrier? I'm like, why are you not in the field knocking doors, dialing phones, or calling me with I don't care. Like, yeah, I kind of care like this much. But what I was more worried about is why he wasn't working on his business instead of reading like the fine print of the fine print. It's all a balancing act, you know?
Yeah, no, it makes sense. I mean, you can't overcomplicate it either. You get out and work, you write the business. Company I was with for 7 years, they didn't pay commission on the policy fee. Like, whoop-de-doo. I mean, you just go out and write business. I mean, it's just little things that, I don't know, little things that maybe some people worry about that maybe make a big deal out of that you really don't need to. You just go out and
Although
write
here's another
business.
one. Here's another independent advantage that I'm sure you've enjoyed over the course of your career now versus in the past. We don't have household caps. Like if you write two really quality pieces of business, that's probably going to be an advanced cap, which is appropriate, but there's no household cap. And it says, oh, you can only make $500 per address. What is that? Like leads are expensive. I paid $40 for the lead, $4 for my gas, all this work to get this work done, and they're going to cap you at $500 per home. That's crazy talk. Like writing
Yeah.
good business, you should get paid good for the good work you're doing.
Yeah, I remember that. First company I was with, I was set up, I think it was $800 per household was like the maximum I could make. So yeah, you could write 5 people in the house. You could write 3 or 4 thousand in premium in that one home, and all you're going to see is $800.
Yeah.
And so, yeah, it protects the agent with, from a big chargeback, but still, I mean, that's maybe a little bit. I could see maybe 1,500, 12 to
Mhm.
1,500 legit per application. But I mean, per household, it's, I don't know, maybe a little bit strict, I think.
Competitive disadvantage that they have to see on the captive side. And some of what I want people to see in the videos that we do is that there are so many good options out there that, yes, even if you just wanted to write two companies, you leave in a captive situation, you could write a Citizens or a Baltimore Life, a Lumenco, a Polish Falcons, a Sentinel, and do 95% of your business with one company, fill in the rest with another, and put yourself in such a better situation, including you and your client.
Yeah, like we were saying, I mean, I hope these trainings have been helpful for those of you that, like I said, just kind of looking into some different carriers, those that maybe not a whole lot of people know about. We have the big name carriers too. But again, I mean, I don't feel like you have to. I mean, there's plenty of other options out there with good, maybe smaller companies that you get maybe the more small company feel. You get to know people too at the different home offices when you're calling out there talking to people. You're not always talking to a different person. They get to know you a little bit. I think building those relationships with the people that are handling our business on a regular basis is a good thing.
Absolutely.
And so check us out. Check out my agency as well, Unity Life Group, for in-home sales, telesales. We do have a lead program. We do have weekly trainings, as you're on one right now, as well as ongoing support. You have access to me. I've been in the business for 20 years doing this. You ever have questions, you need help, I'm here to help you. Great opportunity to build a team and multiply your income. Again, multiple carriers. We do have high level contracts available as well for those that are out writing. Maybe they have a team and they want to bring on more agents. They need a little bit more room to build and grow. And for future trainings as well, whether you're a part of Unity Life Group or not, hop on adambrsan.com and sign up, and you will receive an email weekly of future topics to come. check out adambrsan.com/training, and also the YouTube channel for videos. All of the different content is on here each week. And anything you wanted to add, Chris, before we sign off for the day?
Yeah, put the numbers in your favor. This business is merely a numbers game. It's literally built on math formulas and actuaries and statistics and the law of large averages. If you put yourself in front of 15 people this week, you can't fail. I don't care what product you're selling, what company you're working for, what commission level you're on, what else is happening around you. If you went out and you gave your presentation and told your story and offered a product to 15 people this week, you're going to do fine. And then do the same thing next week. Get a little bit better each day that you do it. The whole career is not going to change in one day or 1 week, but a little bit at a time.
Yep. And then just, you got to be willing to bet on yourself. You got to be willing to spend money on leads. Those are the leads is what's going to put you in front of people. So, consistency is key, making sure to have those lead orders placed every single week. And that way you'll never run out of people to see. And again, don't be afraid to maybe knock on some doors around your leads. Don't be afraid to ask for referrals. Sometimes we get so excited when we make a sale that we get back to the car and we're like, oh shoot, I probably should have asked if I knew anybody else who needed this. I mean, those, referrals, remember, referrals are free leads. Referrals are people that are more than likely in the same scenario as the person that you just met with, and they're going to make up for the people that slam the door in your face. So, don't be afraid to ask for referrals. It's just, like I said, going to put you in front of that many more opportunities. But you're right, Chris, activity is key. Got to be out there seeing people. And the more people you have to see, the more opportunities you're going to have and the more sales you're going to make. And rinse and repeat, get some more leads and do it all over again. So hope y'all have a great week. Thanks again for coming on. Look forward to seeing y'all again next Monday. Same time, same place.
Appreciate it.